The Fed just cut rates by a quarter point, bringing them down to 4 to 4.25%. Officials admitted the job market is softening, with payroll growth averaging only 71,000 per month over the past year, and revisions flipping several months into net losses. They also hinted at 2 more cuts before the year's over, and traders are already betting on October and December. But here's the catch. Rate cuts don't always spark bull markets. In fact, history shows stocks often stumble in the first year or two after cuts because they usually confirm slowing growth. It's only over the longer term, 3 to 4 years, when recovery tends to show up. That said, markets didn't wait to celebrate. The S&P 500 closed at 6,666, exactly 10 times the 2009 low. The Nasdaq led gains on AI strength, small caps spiked before cooling off, and the big tech giants once again outperformed. All 4 major U.S. indexes hit record highs on the same day, something that's happened only a handful of times in the past 40 years, usually before bouts of volatility. And retail investors just poured more money into stocks than in any week since December, a sign people are treating Fed cuts like a guaranteed bull run, which can be dangerous. Gold kept climbing, setting another record and extending its winning streak to 5 weeks. Silver and miners moved higher too. Lower rates weaken the dollar and reduce interest returns, so investors shift into metals. Add tariff concerns on top, and the safety trade keeps building momentum. The real fireworks came from uranium. U.S. Department of Energy announced plans to build a uranium reserve to cut reliance on Russia, and the sector exploded higher. Cameco, Uranium Energy, and Centrus all surged, pushing uranium stocks up 100% since April. It's not just speculation. Nuclear sites at the intersection of AI-driven energy demand, grid reliability, and national security. Utilities like Constellation and new reactor players like Oklo are drawing attention. And one of our level 2 trades here just delivered a 55% gain in only 25 days. And while everyone knows NVIDIA and Microsoft, the bigger AI story may be hiding in plain sight. Building and running massive data centers is its own economy. Think servers from Dell, HP Enterprise, and Supermicro. Networking gear from Arista and Cisco. Cooling systems from Vertov and Johnson Controls. Backup power from Caterpillar and Cummins. Electrical systems from Eaton and Schneider Electric. Even the construction crews like Jacobs and Holder get a piece. Each data center costs about $39 million per megawatt, and the cooling alone can run hundreds of thousands per megawatt, because if the servers overheat, everything goes down. That means the real AI trade isn't just about chips. It's about the picks and shovels that keep the machines running. So here's the takeaway. The Fed is cutting, but the path ahead is divided. Stocks, gold, and uranium all hit highs, and history says risk rises in the short run after cuts. Yet investors are still piling into metals, small caps, biotech, real estate, and nuclear, chasing momentum. On the flip side, home builders dropped more than 4%, master limited partnerships slipped almost 2%, and agriculture names fell about 1%. Notable movers included Palantir, up nearly 8%, and Oklo, which soared almost 60% as nuclear momentum kept accelerating. By the week's end, the S&P 500 gained 0.8%. The Dow added 1% to close above 46,300 for the first time, and the Nasdaq led with a 1.5% climb. Looking ahead, the Fed takes center stage again, with officials delivering follow-up speeches after last week's cut. Traders will parse every word for clues on how many more cuts could come this year. Want weekly recaps like this and a heads up on what could move markets next? Click the link below and subscribe to the Level Fields newsletter. It's fast, free, and built for investors who don't want to miss a beat. Follow and subscribe for more. Level Fields Elite Investing, Effortless AI.